Hi everybody, this is Gary Dean and this is our Sentiment Timing weekly video recap for Wednesday, July 29th, 2015. So, things have been getting pretty interesting, and in the not so distant future they're going to get even more interesting, and I'll go over that in the report. So let's get started. At Sentiment Timing, we believe that the human beings in the markets are irrational, and there's always an irrational element at work, and that is what creates market opportunities. Now, we base these irrational elements in the market through Woody Dorsey's proprietary sentiment database, as well as his technical timing indicators, and then from there we combine it with a technical analysis that works into the price part. And something that we just added into our service is we're going to be doing video reports similar to this, but it's going to be more in a for the premium members and given specific price and what we see going on a technical aspect. So we're going to be putting them out on Monday and Wednesday, and then our normal Witten reports on Tuesday and Thursday. So last on the 21st, I did a video report and told you that I was expecting some type of pullback, and the reason was we had 1, 2, 3, 4, 5, and we had bearish divergences on the 60-minute chart, and what we were looking for was a pullback someplace down between the 2086, 2076, and all the way down to the 2062. That is your typical retracement, and it was also this bearish pattern. Now, if we take a look at the S&P, this was the 21st right here, and we came all the way down to the 62% retracement. So the 2063 was the 78% retracement. I'm sorry. And from there, we got a 4% bullish reading, which I showed you here, and I put it out yesterday. And that was hinting that we were going to get some type of rally, and that is exactly what we got. So what I want to show you just real quick on the shorter term charts, and this is part of the stuff that I went over for the premium report, is the short term charts are showing that we have bearish divergences. We're running right into the 78% retracement. That is hinting that we're going to get some kind of pullback. Now, the pullback part that you would probably want to keep an eye on, it's not as bearish as it was because we don't have the bearish divergences on the 60-minute charts. So it's either going to be someplace coming down to the 2086, 2081, possibly even a 2073. There's no real important time, say, turns that we're looking at right now. So what we want to do is pay attention to sentiment and what the charts are telling us. So this is saying that it's suggesting that we could get some kind of pullback. Now, let's say they just have a little minor pullback and then they head back up. You'd want to keep an eye on the 2118. If it gets above that, then things are going to just stay within this real big trading zone. So we got the pullback last week. We got the rally. Now we're looking for a pullback, and what we want to do is just keep an eye on things when it pulls back, see how the bulls react. And tomorrow we'll be putting out our new sentiment numbers and figuring out what it is. But the important part about yesterday's report is that there's a potential trading target or sell zone, and I have to block out these dates because they're really, really important, and they're for members only. And what Woody is calling it's the kill zone, and that's the transition from a bullish to a bearish market. So there's things that are approaching right now that nobody sees. I mean, you have some people hinting about it when the markets are going down, but then when they rally back up like yesterday and today, they're back on the bullish camp, and things are good and we're heading to new highs. Well, Woody has this stuff all labeled out, and this is what we're going to be pricing not pricing in, but I meant watching on the technical aspect of where this turn could come. Now, another thing that he had said was that it's actually one of the best setups that he has seen in a very, very long time. As far as the last one that we saw was the black hole that took place in in September, last September, where we had the 200-point drop, and then we had the 280-point rally. Well, we have another one of those setting up right now, and we have the specific dates that are going to be that are in place. And what we're going to do is really just watch how things play out as we approach these dates, see where sentiment is. If sentiment goes from the 4% or comes down a little bit on the moving average and then pops back up and we're back up into the 90s again. And when the intermediate term sentiment, which is a position trade, gets back into the extreme bullish or just say goes sideways to up a little bit, we're going to know everything is in place. And that's really what we're going to do from there is start eyeing down where the pivots are. So on this, the bearish count on this particular one is that this was your wave A, this is your wave B, and now we're going to come down and make a wave C and take these lows out. That's one option. The other option is that we made a wave A, and this was last week when I had said to expect a drop. This was your wave B, and now what happens is we're going to chop and make a wave C where we either test these highs or break them a little bit. This is going to get everybody bullish in the markets, and like I said, what Woody is anticipating is a black hole event that's pending, and that whether it just starts here, we know the specific dates when things are going to turn, but there's also that big black hole that he's talking about that's going to be like this. So between just the September to the November, people could have made a year and a half worth of points on the S&P since it was 480 points. This is happening again, and this is why things are important. They've been a little bit boring, they've been a little bit choppy, and now they're going to start to get exciting again. So we're looking forward to this. And like I said, just on the technical aspect of things, expect some kind of pullback. Either it's going to start tomorrow and come down, or it's going to come down a little bit and then pop up to the 2118. Don't fall in love with the bull side, not with these divergences here. And that's pretty much all we have for tonight. The same what I was offering last week, it's going to be whoever joins, if you want to join the Markets Path as well, I'm leaving that open. Again, that's a $79.99 a month plan that I run. It's another service, and it's free as long as you're a member of Sentiment Timing. Just send me an email when you join, and I will get you signed up. We've had a lot of people that have come over to it. Some pretty good just feedback on it. They like that aspect, and now we're putting the new video reports into the Sentiment Timing. So a lot of new stuff is happening right now. And we have these important dates that are approaching that if you're on the wrong side of this market, you're going to get crushed. So with that, until next week, have a great week trading.